So today we're going to go over the news article that came out that had quotes from, it's actually an article published by a gentleman out of the University of Colorado Boulder. And it's actually really good because it talks about Opendoor, which is one of the iBuying platforms. So what's an iBuyer? An iBuyer is essentially a company like Opendoor that uses technology to do an analysis on your home, give you a quote, if you will, an instant offer on your home, so that if you were in a hurry to sell it, didn't want to go through the regular channels of, marketing it and whatnot, and open houses and getting it on the MLS, all those things. It's a dramatic shift in the way people have been doing selling of homes, and it's been in the news a lot in terms of the fact that Opendoor was purchased by Zillow within the last year to allow Zillow that opportunity to do the iBuying process. So that instant buyer, if you will, is the real estate company offering you the cash for the home. Now, obviously, they're not doing it out of the goodness of their hearts or because they even know you or like you. They're in business to make a profit, like everybody else, right? So they are going to charge a fee. It's typically 6 to 8% of the sale price, and that can vary. And also, your offer price can vary. So a lot of times these iBuyers that are out there like Opendoor will make you an offer on your home, typically below market. So usually if you're selling your home that way, it's because you're in a hurry and maybe don't want to do all the repairs. So I want to share this article and let's review it together because it kind of highlights really what I want to talk about, like why it matters, how it impacts you, what we should be looking for on this. So let's take a look at this here. Let me share the screen. And that's really what it boils down to, is we want to see how it can impact us as a buyer or seller. So now, as a buyer, if you're looking at some of the Opendoor properties, this might be a good time. Well, here's why. For the first time since we've seen in a while, Opendoor is selling homes at a loss. Now, that means that between what they've paid for them and what they're now selling them for, their new list price, they are taking a loss on this. And here's this gentleman's comments here, Mike Delpreet. He says, for the first time in its existence, Opendoor is entering territory where in aggregate it's selling homes for less than their purchase price. So it's going to put their model under pressure, as he talks about, and really similar to what happened to Zillow last year, in terms of the Zillow had to pull out of the iBuying process in order to make it work. Sorry if we're losing some of the connection to, looks like LinkedIn might be dropping off. We're streaming this to multiple platforms, but I'll go ahead and post a recording of this later to LinkedIn. So what we've got here is similar again to what happened to Zillow. Zillow got into the iBuying space. They kind of lost their shirts with it because the markets were shifting. Phoenix is where the biggest number of iBuyers are, the biggest market for them in terms of where Zillow rolled this out. And so if you go back here, it says Opendoor outperformed Zillow during the dark days of 2020-21 when Zillow's offers were imploding. So that's why they bought Opendoor. So now we have Opendoor now facing the same situation because, everybody thought that they had a great model, right? They were going to buy your home cash, and guess what? The market was going up, so they were able to make a profit on that and sell it for a higher price. So now what we're seeing in 2022 is a big shift. Obviously, interest rates have changed things, and it's really mimicking what we're seeing with what happened with Zillow in 2021. So Opendoor's pricing can't keep up with the changing market. So what they paid early on, just a few months ago even, has now shifted. We've all seen it locally. Prices have softened in each area on the Central Coast here. So that premium that they thought they were going to get is now, you can see here now in this section here, starting to dip. So we're seeing a real change in what they're able to get for the home and what they're selling it for. And we can compare Zillow 2021 to really the trend of 2022 with Opendoor, kind of following the same lines there. So, and Opendoor's buy to list premium So you tack on their costs on top of that. They're really struggling with this. So it's fair to say, like I like how he says, it's fair to say Opendoor's pricing operation is more nuanced and sophisticated. So what that means is they're having to leverage some price cuts to make it work. It sounds like so. The way they model it and the way they price things is they've got a lot more variables in this. So now we're seeing what aggressive price cuts. So again, Zillow had some major price cuts in 2021, and again 2022. You can see the trends that he overlaid there in terms of percentage of listings. But here's really what I want to get to here is really the buying to list differences. So they're leveraging against some major price cuts here in order to move their properties. So they paid a higher price for these, and you can see this over the last year where the pricing for a while was working, right? You see this, the blue line is what they were selling them for or what they were offering, and then the pink line is the current listing premiums that we've seen. So they were fine when they had that buffer in there, that margin, and now it's gone. So with the turnaround in the last few months, you can see that now is going away. So they're making some pretty big price cuts in the area. So you see that before they had this buffer, and now they're just doing away with it. They're just trying to move the inventory so they don't lose more money. So they're selling, it says here, they're selling about 2,000 homes a month. Now it's an average sale price of 400,000. So obviously a lot of these aren't happening in California, because oftentimes here in California, we could get sellers pretty close to the top of market in most areas. We're not really seeing the significant losses like in some areas. We're seeing a softening of market, but not a major one. So about 2%, amounting to a $16 million loss for them of those homes that they're selling. So Opendoor is racking up other expenses, including, I thought this was interesting, a $3,500 buyer agent commission bonus and seller concessions to previously unseen levels. So not only are they having to purchase the home from the seller, they're now reselling it. So they have resale costs. They have to pay the agents to sell them because there's a buyer agent still on the other end. So as much as the iBuying process makes it sound as if though you're just doing this all electronically, there's still realtors involved that Zillow is connecting you to, whether you buy or sell with the iBuying platform of Opendoor. So the bottom line is that just a few months ago, this same person was talking about how Opendoor is going to make record profits from the home appreciation. And really, we all thought that. We thought if the market continued, they would do very well. But just like now, we're going to take this back to more of a local area, is that the bottom line is you don't want to time a market if you're a novice. So what I mean by that is here in our local area, we have contractors, we have professional house flippers, and we have investors that are always looking for properties, and they're in the business to do that. So I'm coming along and I want to think I'm going to flip a home and do something that all these professionals are doing. Buyer beware, right? So you always want to be cautious when you're trying to time a market, especially in this climate. Obviously, Opendoor was doing what flippers do. They buy them at a low price and then they try to flip them and make a profit. Now that works in a rising market, and this is another good example of just really investment common sense of you don't want to be purchasing homes to flip unless you know exactly what you're doing in a market that's shifting. We saw interest rates shift. That can always be a risk. You always want to leave a buffer for yourself in terms of your costs if you're trying to do a project like that. So that's a whole nother discussion of how we do that. But so again, as a buyer, it's just a cautionary tale again of don't try to time the market. Work within your own economy. What can you purchase today? So you want to look at that in terms of if I can buy this property today, am I going to hold it for 10 years? If I am, probably not going to have a problem. But am I going to flip it in the next year because I want to make money? Probably not the best time to do that right now, right? So again, just use some common sense when you're thinking these things through. Step back from the news media hype and all the craziness. You want to compare it to what your rent is versus what your payments would be. What's the savings over maybe a 10-year process? So always look at those numbers. So those are other discussions for other topics. But nonetheless, go ahead and give me a call. Reach out to your realtor, your lender, your CPA. They can all kind of run these numbers for you in terms of a rent or buy analysis. Or do I want to flip a property? Maybe I do have a project I want to work on. Then let's talk. Let's see what we can do. A lot of times, getting back to that whole iBuyer idea, iBuyers are good for somebody who's maybe inherited a property that doesn't want to do anything work with it, and they just want to get rid of it. So that's maybe an iBuying platform to look at. The problem with Zillow is you just get one offer from them, one company. So you want to look at companies like EXP. We've got express offers. We'll do another video on that where we can submit that property to multiple buyers that are on the platform that could be a match for you. So no guarantees on that. I still believe that your best bet is to get that home on the multiple listing service, pay a professional that does this all the time. That's a realtor. And that exposes you to the broadest market. That exposes you to not only the local realtors, the local MLS, exposes you on a higher level to Zillow, Trulia, Redfin, all those other things. They're all connected now. But by just doing one offer to Zillow or an iBuyer platform like Opendoor, that's just one offer. Only one person's looking at that home with you. So you're really narrowing down your market by just getting a bid from that one person. So before doing that, I highly recommend you talk to myself or your realtor and get that home on the public market. You're always going to get your best number by putting it on the MLS. The market will tell you what your home is worth. If your home's sitting on the market for a while, that's telling you it might be too high, right? But if you price it low and you get multiple offers in this climate, that tells you you've priced it a little low, but that's great because you get the auction effect and the market will raise up. You'll get multiple offers above asking to what the market is. The market, again, like we've said before, is what a buyer is willing to pay for a home and what a seller is willing to sell it at. That's the market at this moment, right? So that will always change because it's all timing on who's buying and who's selling at that time, and that's what sets a market. So anyway, I'll get off my soapbox there, if you will. But I wanted to just discuss that Opendoor article. I thought that was really interesting since iBuying is in the news. You may hear a little bit about that in the news. And that, again, was from an article from Mel Dupree. I'll put that link back in the YouTube folder or the YouTube comments down below after this is done. And, he's a real estate tech strategist that works at the University of Colorado Boulder, it says. So he's into real estate tech. He does venture capital, consulting. So this is somebody that's kind of in the know in terms of, looking at some of these analysis. So I liked how he worded this Opendoor article. So I'll go ahead and share that with you too. But that's what I thought we'd talk about today. So thanks again for joining us. Until next time, take care.